is Eric from Traders Helping Traders with this week's Tricks of the Trade. People ask me every once in a while, what is the most reliable market formation? And almost without exception, the most reliable market formation is a pennant formation. And why would that be? Well, because a pennant formation shows a market in balance. Supply and demand is perfectly balanced, and so prices tend to chop and to consolidate, and they end up moving sideways, forming a pennant type pattern, which looks very similar to this. Now, the thing with pennants, and any formation really, is that they really are in the eye of the beholder. You could draw this to be a large pennant or a small pennant. Some people may see the pennant like this. Others might only see it like this. It really is a rather subjective market formation, but it can occur in any market. And when it does occur, you should pay attention because it is showing a market that is in balance and a market that can go either way. Therefore, the way you would trade a pennant is quite simply you would bracket the trade. You would set your buy order above the pennant to catch a breakout higher, and you would sell your market below a breakout on the downside of the pennant. I never enter my trades too tight on a pennant formation because there is a chance that it's not a true pennant and that the market will just slosh around a little bit instead of giving you a true breakout. However, pennants tend to be rare. So when you do see a pennant formation, it's to your advantage to try to take advantage of that trade. So in this particular situation, we have soybean meal that has been consolidating, looks like for about the better part of a month. And then the market finally broke out. And after the breakout, you can see that the market made some very nice gains. Now that's characteristic of a pennant type formation, is that you will usually get a fairly good move out of it. Once the market chooses a direction, it will probably take off in that direction and allow you a little bit of profit. Now, my second most reliable market formation are channels. And channels show us the same thing as pennants, except in a channel, the market is pretty much stuck moving sideways. There's not this consolidation, this narrowing that we see in a pennant style formation. In a channel, the market is stuck and is showing us obvious support and resistance areas. And the way you trade a channel formation is exactly the same as you would trade a pennant formation. You place your buy order above, you place your sell order below. The beauty of this is you really don't have to second guess the market. You just let it decide for you. And when the market finally breaks out, once again, you usually have a pretty good opportunity to take advantage of some profits. Now, the problem with pennant formations and channel formations is that they require a certain amount of patience. You need to be patient enough to let the formation develop so that you can set up your channels or your pennants so that you can take advantage of the trade. Usually I like to see the market channel or pennant for at least 3 or 4 days. Anything less than that, you're just looking at support or resistance forming. Remember, resistance is our green-red bar combination and support is our red-green bar combination. I like to get at least one instance of each before I classify it as a channel or a pendant. And here you can see we have support followed the next day by resistance. So I would consider this to be a channel formation, and you could bracket it and take the trade accordingly. And there you can see we got a little bit of a move to the upside. Now with these types of formations, it's to your advantage to take profit when the market gives you profit. Of course, you can always try to trail a stop. However, they're showing a market imbalance, so when the market moves out of balance, it'll usually move into balance again very quickly. Let me take a look at another chart for you. Okay, this is a chart of the June British pound, and the currencies tend to give you a lot of pennant and channel type formations because these markets tend to move very quickly into balanced situations. So here we have a market that has a pennant formed, and we could buy on a breakout above, or pardon me, not a pennant, but a channel form, buy a breakout above, sell a breakout below. Okay, the market moves lower, and after a few days we have yet another channel formation. So we would do it all over again. And now notice how I try to let the market move around for a few days before I actually classify it as a channel. I didn't hop on this at the second day and say, oh, we have a channel formation now. Okay, the market continues to move lower. Now I want to show you the third type of channel formation, and this is actually an angled channel formation. We looked at these the other week, and I drew that the wrong direction. Hold on. It's the same idea, but here the market is channeling sideways at a little bit of an incline. And we normally expect the breakout in these types of situations to come opposite the incline or the pullback. Oh, they didn't go far enough. But you get the idea. You will find these time and again on charts. If you look back into the history of the chart, you can see that there's several channels in the pound. You can see we have several inclining channels. And pennants, of course, are a little harder to come by, as I mentioned. But if you make a habit of looking for those three style formations, you will usually do pretty well for yourself. Again, the key is to exercise patience and to let the formation develop along far enough so that you can actually take advantage of it. And this is true both in intraday and position trading charts. So a little something for you to look for this week when you're going over your charts and looking for trades. And that's this week's Tricks of the Trade.